car market crisis. What's really going on? In recent months, the car industry has been facing a crisis that few could have predicted. Sales are up at Ford, but down at General Motors. As we saw earlier this week, Nissan is struggling to stay afloat, Stellantis is feeling the pinch, and even Toyota and Honda, two of the most reliable names in the market, are seeing fewer sales than expected. Thousands of brand new trucks and SUVs are sitting unsold on dealership lots, some for months at a time, with massive price cuts and generous discounts that aren't moving the vehicles. So, what exactly is going on here? Why are brand new trucks and SUVs sitting unsold, despite dealerships offering discounts? And what could this mean for the future of the automotive industry? The car market has always been a significant indicator of the broader economic health of a country. From the early days of the Ford Model T to the emergence of electric vehicles like Tesla, the auto industry has consistently symbolized progress, prosperity, and innovation. Cars are more than just modes of transportation. They represent our dreams, our identities, and in many ways, our futures. However, as we stand at a crossroads in 2024, the car industry is showing signs of a deep crisis that could have far-reaching consequences for consumers, manufacturers, and the economy as a whole. The decline of dealerships, a surprising turn of events. Let's start by looking at the situation at the dealerships. In cities across the United States, you'll find rows upon rows of shiny new trucks and SUVs parked in neat lines on dealership lots. It used to be that these cars would fly off the lots, snapped up by eager buyers within days or weeks of arriving. But now these once coveted vehicles are sitting there, unsold, sometimes for months at a time. This isn't just a few cars, it's an epidemic sweeping across dealerships nationwide. As of the last quarter of 2024, dealerships are sitting on an unprecedented inventory of unsold trucks and SUVs. Ford's flagship F-150, typically one of the fastest-selling trucks in America, is now sitting unsold on dealer lots for more than 200 days. That's more than 6 months of inventory just waiting for a buyer. And it's not just Ford. Ram trucks, the competition's answer to the F-150, are also piling up unsold. From the light-duty Ram 1500 to the heavy-duty Ram 3500, tens of thousands of these trucks are collecting dust, while dealerships try desperately to make space on their lots for the next batch of new arrivals. The same story is unfolding at Toyota, Honda, and even high-end brands like BMW and Mercedes. Take the Toyota Tacoma, for example. Once a beloved truck with a reputation for reliability and durability, the Tacoma is now sitting unsold at dealerships, with no one willing to pay the increasingly high prices. The same applies to SUVs like the Ford Explorer and the Toyota Tundra, which once sold almost as quickly as they arrived. The signs are clear. The car market is in trouble, and this shift is being felt everywhere. One of the most noticeable signs of this crisis is the overflow of unsold cars spilling out of dealerships and into rented lots. In some areas, dealerships have even resorted to parking these unsold vehicles on grassy fields and vacant lots, far from the dealership's main location. These overflow lots are a last-ditch effort to store the cars until they can be sold, or, more likely, heavily discounted to move them. It's almost as if these cars are waiting for their fate to be sealed, unable to find a home despite their brand new condition. Price tag shock. The cost of cars soars to unprecedented heights. So what's causing this buildup of unsold vehicles? Well, it's no secret that car prices have been rising steadily over the past few years. In fact, new car prices have increased by more than 42% since 2019. While some of this increase can be attributed to inflation and the rising cost of materials, much of it comes down to the strategies of manufacturers themselves. In an effort to boost profits, manufacturers have steadily increased the manufacturer's suggested retail price, MSRP, of their vehicles, making them significantly more expensive for consumers. Take, for example, the Toyota Tundra Platinum Crewmax, a popular truck that was once within reach for the average American family. At $75,000, it's no longer a realistic option for most people, especially in an era where wages have remained largely stagnant while costs of living continue to climb. It's not just the Tundra. Prices for trucks and SUVs across the board are soaring. Even mid-range vehicles, once considered affordable, are now priced in the luxury range. And while dealerships are offering generous discounts of $10,000 to $12,000 off MSRP, these prices are still too high for most buyers. This steep price increase is not just frustrating for consumers, it's also bad for dealerships. The longer these cars stay on the lots, the more money dealerships lose. Every vehicle sitting unsold on a dealership's lot represents money that's tied up in inventory, money that could otherwise be used to buy new stock or invest in marketing and sales efforts. But as more cars pile up, dealerships are running out of options. The struggling consumer. Rising costs and negative equity consumers are also feeling the strain in this crisis. The average American is facing significant financial challenges when buying a car, with the national average for negative equity on car loans rising to $7,200. Negative equity occurs when a borrower owes more on their car loan than the car is worth, making it difficult to trade in an old car without taking on more debt. Compounding this issue is the high cost of new cars, with average loan payments exceeding $760 per month and 1 in 6 borrowers paying over $1,000. Along with rising insurance premiums, which have doubled in some states, car ownership is becoming increasingly out of reach for many families. This financial strain has led to higher loan delinquencies and a 23% increase in repossession rates, pushing the dream of car ownership further away for many. The pressure on dealerships, a struggle to survive. Dealerships are facing their own crisis as inventory piles up and profit margins shrink. Operating on a flooring system where they borrow money to finance their inventory, dealerships are incurring mounting costs as unsold cars sit on lots. To move these vehicles, they're forced to offer heavy discounts and financing deals, often selling at a loss. This is devaluing used cars, once a profitable part of the business, and further complicating the situation. Even large nationwide chains are struggling, with some closing their doors due to the financial strain. If this continues, it could lead to a domino effect, where more dealerships go out of business, worsening the state of the car market. The impact on manufacturers, overproduction, and layoffs. This crisis is also being felt at the manufacturer level, with an oversupply of vehicles sitting unsold on dealer lots. Manufacturers are cutting back on production in order to match the current level of demand. Some companies like Stellantis have already announced plans to cut thousands of jobs as they scale back production to align with the market downturn. Nissan, one of the hardest-hit manufacturers, has already seen its profits drop by 70%, and the company is planning to slash production by 25% in the coming months. This is a drastic move for a company that once prided itself on its ability to produce a wide range of vehicles for every type of consumer. But with the rising costs of materials and labor, in a market that's no longer responding to these products, Nissan is forced to rethink its strategy. It's not just the traditional car makers that are feeling the pinch either. The rise of electric vehicles, EVs, has created new challenges for manufacturers who are struggling to make the switch to electric production. Ford, for example, has halted production of its highly anticipated F-150 Lightning electric truck due to poor sales. This setback is forcing Ford to reconsider its EV strategy, and it may even lead to the cancellation of some planned electric models. The domino effect. Economic consequences for the broader economy. The automotive crisis is affecting more than just the car industry. As dealerships close and manufacturers cut production, the broader economy is feeling the impact. The auto sector supports millions of jobs in manufacturing, sales, and service, so its downturn ripples through local economies and national GDP. Reduced production means fewer factory jobs and components, leading to higher unemployment in car-dependent areas like Michigan, Ohio, and Indiana. With fewer cars sold, less money is injected into the economy, deepening the stagnation. What's next for the car market? To survive, dealerships must lower prices, offer better financing, and improve customer service. Manufacturers need to focus on more affordable vehicles that meet consumer needs. While electric vehicles remain part of the future, the immediate focus should be on balancing affordability, availability, and demand. The car market's resilience will be tested in 2025 as dealerships and manufacturers hope for a rebound. But it remains to be seen if this crisis can be overcome in time to save the industry.